Welcome everyone. How you doing? What's up, Sonny? $1K. It's happening. How's your day? Nice, man. That's a good day. Yeah, I only took a few trades today. And then there's like a 10-minute period there at the end of the day. I took like 3 trades in 10 minutes, something. Oh yeah, there's always only like 10 people here when most people don't even have the links posted for another couple minutes. Jenks, how we doing? What's beyond that? I don't know. It was up huge, 13 or something. 13. It was up 15. It's insane. Jack, how you doing? Didn't they? Wasn't it like bad? I didn't think loss per share doubled, revenue declined. Seems like it was not good earnings, but man, they rallied. I'm sure they must have had some crazy guidance or something. Yeah, yeah, J-Dub, that sure would make them a better company, I'll tell you that much. Yeah, the only people who want to eat Beyond Meat are them AI robots. Yeah, wow, overall that sure looks like a pretty bad earnings report. Uh, I'll probably read more of it tomorrow, though. Welcome everybody. How we doing? Hope everybody had a good day today. We had a lot of fun in voice chat if anybody was in there. Yeah, I did actually see that, and I thought that it was so interesting to see Beyond rally on that. One of the interesting things I noted from that, Scotty, is that uh they didn't ban burger, but like they can't, say rib roast or filet or whatever, even if like, but they didn't ban the term burger, which I found that kind of interesting. But yeah, I saw that. And good for them, France. I mean, yeah, like it's okay if you're vegetarian, but also like you c- people shouldn't trick themselves into thinking that, a product with like 40 different ingredients is somehow better than meat, which contains meat, you know. Oh, Toasty's in here, huh? Direct messaging me, old Toasty. Toasty, what's your opinion on Beyond Meat being up 80% on bad earnings? Yes, Scotty. Exactly. Exactly. Vegan leather, so you mean not leather. How's your shit stock doing? That's pretty much just sideways all day, huh? Man, I bet this thing is a print fest. Look at that, dude. That's the opening range on that right there. That would have paid really well. Oh no, never mind. I'm wrong. My time was wrong. Oh no, yeah, we're good. We're good. That's the opening range right there. Printer. Printer. You're probably not even looking at my screen, are you, Testy? Oh yeah, you were on another horrible stock. You were on this one today, I think. I went on a ripper. What's up with that? Why'd that thing run? There's no reason. Oh, because they had those sick earnings. Didn't they have like really good earnings and really great guidance? Not that great earnings, but good guidance or something. What a breakout on it, huh? How's Rivian doing? Oh, big bounce, huh? Wow. That's actually a printer off of that 10 level. Wow. Lemonade too. What's that one? What's their LMND? Yeah. Ouch. No, Toasty's a long-term holder of Rivian. His average is 175 or something like that. So he's pretty much just in it for the long haul. Oh wow. Ripper on that into earnings to then give it all back on earnings. Love that. Toasty's a long-term Rivian holder. Uh, oh yeah, do you really want me to pull up that chart? I mean, we can show everybody your NNDM trade if you want. Oops, don't want to, don't want to post that. Give me just 1 second and we will get to rolling here. NNDM, yeah, let's check out Toasty's trade. This was a really sick hit for him. So, uh, oh, we need a little bit more time than that, it looks like nowadays. So Toasty entered up here on NNDM at 1780. He took the average at 6 and then ended up stopping out down here at 3. Go, huh? Get earnings out of them. Yeah, nice little pop. Dried up volume on it though. Old grocery outlet, huh? That's a fun one. I bet that option chain is horrible. US SPY would come back below 500. Man, it hit my target pretty on point today. I think we bounced it about 1 penny before it. But I still do think that sometime here, I'm not gonna say when. And don't be bearish or anything like that. I don't think a 500 test is out of the question, or maybe even come down to this, 13, 15, 20 EMA area down here. And you could probably get a pretty nice bounce off of there if we can get that pullback. But I mean, this has shifted now, but that's where I don't know when I was talking whatever level I was talking 504.70 something. This is where I got that level from. It's just that daily 5 EMA. It's been holding us really good, going on a couple of months now. So that was why I was talking dip buys in VC today at that price, and we happened to wick down to it. I mean, pretty perfect. We were close, 75. Any insight on CLSK? I mean, no, I don't know. I'm the wrong person to ask. Ask Grizzly about that thing. I mean, I believe in it less than a lot of other people do, but you still don't want to jump in front of a train like those Bitcoin names lately. Obviously big sell on it today, but I think they got some proven to do. In their earnings report, they said that they were hoping to double their hash rate over the next year and a half or 2 years or something like that. However, after the Bitcoin halving next month, what they make will be cut in half. So even if they double it, they only go back to the production that they have now, or the mining that they have now. So I'll be curious to see how it plays out for them, but I'm less of a believer than other people are. Yeah, why not, Gustavo? Let's look at it real quick. Can I chart VRT, please? Is that my guy Norvin right there? I think we've already, I mean, this one, I gave the entry way back here. This is where I think people should have gotten VRT. Now you're just kind of chasing choppy consolidation zone. This was the entry back here on VRT, in my opinion. Lunar, well, yeah, that if you bought into that one, you just happened to catch the pump and dump of them, landing on the moon. That's the issue with these companies. They'll put in a real nice move, and then once their cool news is done, they get clobbered. So you can be long on it, I mean, if you want, but remember that until they had some cool news happen, they were not looking good at all. So there's no reason to think that much has changed for them. They just happen to have, a rocket, whatever, land on the moon. So careful there. PLTR. PLTR, I mean, hate the company, but definitely a little bit bullish on it right now. Feeling like I missed it. I was watching it yesterday, talking to a couple of people about it. Didn't take the trade. Overall, pretty disappointed on that. But big picture on PLTR. Oops, not the weekly. You want to watch these just recent highs. I'm not getting long here because we have $1 of upside left. I feel way more comfortable being long down here, because you know like we know that this is resistance up here, so there's no reason to be diving in longs here. You want to be trying to buy low. You typically don't want to get long on the tops of big green candles. Oh God. Okay, we are not. Yeah, we aren't doing. Oh God, here we go. Yeah, I think it did crash or something. Yeah, yeah. There you go. It flipped over. But they got some pictures. Yeah, and so at that point, the second that thing tipped over, you should have sold shares short, pretty much. No questions asked. But I'm sorry. So this isn't a charting lecture. We'll see if we get to the end and we can talk about some charts as well. But for now, we're going to talk the opening range. It's something that I trade every day. Super simple. Use it. Nice, the battery was running out. That is hilarious. So super simple thing to use in your trading. Not only is it, very easy to chart and very easy to like just identify on the chart and everything like that. I even have a script for it pinned in my tab if you happen to not want to chart it yourself. But it's something that I use literally every single day. And like I said, I don't only use it for like, charting and trades, but you can use it for overall kind of market analysis. And we'll get into that once we figure out how to get it charted, why we chart it where we do, some of the things to look for. And then we'll kind of get into how I use it to, look at the market. Zane kind of gave me the idea to talk about this a little bit today because he's heard me, just talk about it in voice chat the past few days. And so we're going to talk about how I like to use it for just overall market analysis. But we're going to use SPY, of course. But so what the opening range is, and I got this from Al Brooks. Everybody knows I love Al Brooks. Great trader, 40 years in the market, over 40 years in the market now. So when you read things from somebody like Al Brooks, he's not like your idiot YouTube gurus, Twitter gurus of today. He's just an old dude who's traded for a long time and has done. He's extremely into market statistics and just, things that are very repeatable in markets. He's really big on just reading the candles, and this isn't, this isn't like named candles like people think. This isn't trying to like trade graveyard dojis or gravestone dojis, whatever they are. I don't care what they are, or like any of that. It is simply looking at a candle and saying what happens when these kinds of candles form, who wins these things. And he couples it with a few very, very simple statistical things that he uses all the time. And then one EMA, the hourly 20 EMA, that's where I got it from. That's why I use it and, post about it in my tab all the time. And that's just a very powerful tool for, it tells you basically everybody in the last day who's long, they're either making money or losing money. So the hourly 20 is a really, really great way to just kind of have an idea of what's going on in the market over the last day and where people have wanted to buy or sell or whatever it is. So then you couple that with something like the opening range. And so how Al Brooks teaches the opening range, and in my opinion, it's obviously in my opinion, it's the best way to do it, is you and I draw a box. If anybody doesn't know, like if you look in my tab and you ever wonder like what's on my charts, the big green box that's always in there, that is the opening range. And how you identify the Al Brooks opening range is you want to draw a box around the highest high and the lowest low of the first hour and a half of the day. And so it doesn't matter which time frame you're on, 5:15, whatever. You'll hear some people, if you start learning about Al Brooks, some of them refer to it as the 18 bar opening range, and that's based on 5-minute candles. It's 18 5-minute candles into the day. And why do we do that amount of candles? And the reason we do that is because of statistics that Al Brooks has, he figured out over the years by watching markets forever, actually trading the markets. The guy was an active trader in the market every single day for basically 40 years. He's like everybody else. He had his struggles in the beginning, and then he just really started reading the charts and reading what they said in front of him. And he doesn't, like myself, doesn't buy into the, markets manipulated against retail, blah, 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 none of that. He's on the same page as me that algos don't care what retail is doing. So why would they do anything to affect us in any way? And so he just says, trade these simple statistics. So I'm going to show how to do it. We want to find our highest high, which was, until the very end of the day, was the first candle of the day. Then we want to identify our lowest low. And so today is a nice day to show this. So we are saying in the first hour and a half of the day. Well, that's technically this candle right here is an hour and a half into the day. However, this candle ends up having nothing to do with the opening range. We just want to find the highest high and the lowest low, which happens to be, the first candle and the third candle of that first hour and a half of the day. So this candle is where it is officially set time-wise. However, that's not what we want for the opening range. We want the highest high right here, and we want the lowest low right here. And then you can just drag it out across your screen. And then I like to make mine green. It's just more like Really, the only reason I do that is because that color is a little bit easier on my eyes. And so I like to just draw the box around it so then I can see it. And so, what is this statistic telling us? And it is telling us that there is an 80% chance, so very high likelihood, and today's a funny day to be talking about it. I like it, but there is an 80% chance that the high or low of the day. We, of course, don't know which. Every single day is different. Are we trending up? Are we trending down? What are we doing? The high or low of the day has been set in the first hour and a half, 80% of the time. Today is one of those days where, it's incorrect. Today is one of the 20% days because this was the highest high until, basically the last 30 minutes of market. We ended up pushing up. Obviously, that Apple news really propelled the market to the upside. But we know that generally speaking, there's an 80% chance that the high or low of day has been set. So we know if we've set a high and we've kind of been trending down all the way into here, there is a very, very good chance that we are either going to have a trading range day or a bear trend day. On the other end, if we had set this low early and started trending upwards, we know that there is an 80% chance that we will get a trading range day or we will get a bull trend day. And so we want to use those statistics to our advantage and kind of have an idea of what the market wants to do for us. And so today was a really great example. We sold off early, set our high, set our low, and then just had some chop. Well, as soon as the opening range is set, we want to analyze the market. And I'm kind of just side note, I'm kind of trying to do my lectures in an interesting or an order now so we can slowly put them all together. So something that we want to take note of, as we learned in last week's class, you always want to take note of any trends that have been formed. And so when we look here, we've set our high. We now have the opening range set. We also have a nice trend set here. So even if we took no entries, through all of this chop, which is just fine, it's pretty volatile. It wasn't like the best thing to trade in the beginning. We know, thanks to the opening range, that there's an 80% chance the higher low of day has been set. We're trending down. So for now, we assume that this is going to be the high of day. So we start to look to short bounces. They can be small bounces, they can be more dramatic bounces, but we want to be in the market short. So a second part of the opening range and a statistic that I preach it all the time. I'm sure people are sick of hearing it. Another one we know is 80% of breakouts fail. So when we know that 80% of breakouts fail, then we know that you want to be cautious being short down here because this is just like any other breakout. And so you want to be cautious being short down here. We have a nice strong support level here. And so this is how we're going to use it. If we're shorting bounces, we want to be taking profit at the opening range down here. And so I talk about that all the time, always be cautious being short down here. And then because we know that there's an 80% chance higher low of day has been set, and there's an 80% chance that breakouts fail. And I should say, I just want to, Al Brooks, kind of depending what you watch, it will be 80 or 90% on the opening range. I typically say 85%, but I'm just going with 80% today because I don't want people to, get all uppy about it. But he will say by that 18th bar of the day, 80 to 90% chance of higher low being set. Now we also know 80% chance or 80% of breakouts fail. So we know that this is potentially high or low of day. We also know this breakout is likely to fail. So we long it down here. This is how another way you might use the opening range. You long it down here. And in this case, we would be looking for a bounce to that trend. This is actually a trade that we took in voice chat today. We got long down here looking for a bounce to that trend. That's it. You don't look for any more than that. You don't look for anything crazy on it. And you try to just catch those technical bounces to technical levels. Well,
when we come down here, you now can say to yourself, we've broken down. I probably want to be short. And we had our nice statistic here. This is, technically the level being set. And then we had our first attempt, second attempt, third attempt, fourth attempt, which failed or ultimately failed because we got back into here. And then finally on this fifth attempt, which would be exactly in line with our 80% of breakouts fail, we're able to catch this short down. And whether you short it on the break through it, or you try to short this bounce up to the opening range, knowing your stop is above it, that's a really, really great way to trade it. And so that's what I tell people is when we're trading around the opening range, you really want to respect those levels because they will often be met with pretty volatile, buying or selling if you break back in or break down. So you want to be pretty tight with your stops on something like that. So maybe you catch this short, really nice. Hopefully you take your money, it worked down to that perfect level we wanted. Then if you want to be long down here, you want to start looking to trim at the opening range because again, 80% of breakouts or breakdowns fail. This applies to everything. Well, we've broken down, so now we're trying to break out. And this is, or break back in, whatever you want to call it. Here's our first attempt, second attempt, third attempt, fourth attempt that all ultimately fail. Fifth attempt tries, sixth attempt dojis, and seventh attempt sends us. So this is where, and we're breaking trend, many, many reasons to be long here. So this is a great way to try to use the opening range for us. I did want to note on a couple other things, as I said, Al Brooks, it depends, 80 to 90% chance high or low of day have been set at that 18th candle. Well, there's 80 candles, 85-minute candles, I think. I'm kind of estimating, but I think there's 85-minute candles in a day. And so what is some of the other ones? What are the statistics on some of the other ones? Because, maybe you don't want to wait an hour and a half, but you still want to be at least aware of what some of those other statistics could be. And so I'm going to say these, and if I'm incorrect, if anybody studies Al Brooks and I say the numbers wrong, feel free to correct me. But if I recall, the first candle of the day is sitting somewhere around a 15 to 20% chance that high or low of day has been set. By the time you get pushing into the first hour of the day, somewhere around here, you know that there is ballpark 65 to 70% chance that the higher low of day has been set here. So again, we want to analyze all those same things of, is the market trending down? Are we at a high? Are we setting lower lows? So, still, even at this first hour into the day, 65 to 70% chance that higher low of day has been set. That is a pretty, that's a pretty good odds in your favor. If you can be 60 to 70% right, then that's pretty good odds in the stock market, and so it's definitely something that you want to take note of. So whether you wait for the 18th one to get to that 80 to 90%, which I personally do, I prefer it. Today was a day where obviously the low was set early, but if you want to wait, that's what I prefer to do. And so I always wait for that. And then even on the other side, it is interesting because we have, when you think about the curve of how rapidly these statistics rise, we go from 15 to 20% chance here, and within an hour and a half, we're all the way up to, 80 to 90%. Well, the rest of these candles, the 62 candles or whatever that are left over, or 70 candles that are left over, those only take you from 90 to 99%. Obviously, when we come to the very last candle of the day, it's a 99.9% chance that high or low of day has been set. It serves us absolutely no purpose to know that statistic. We want to have the highest probability we can as early in the day as we can. And so, a bunch of people, a lot of the gurus, they try to trade these types of systems. One of the big ones is that Master did or whatever. He trades the DRIDR stuff. And it's basically an Al Brooks opening range, but only on the first hour of the day. And then you run some fibs to tell you the potential retracements. He's tried to give them a new name, but they're their glorified fibs run off of the, that first hour opening range. So a ton of people try to use this now, claim it as their own, but keep it simple. Ignore all of those other things. Ignore all of the other things that people like want to do. Ignore what those YouTube people are trying to tell you. And just listen to Al Brooks. He's done it nice and simple. He's traded these methods for a very, very long time. The statistics are very, very repeatable. And as I said, it's very, very easy to draw. And so that's what we're going to kind of do here. We're just going to go back for a couple of days. We're going to look at, because we know our statistic. Well, I'll just go with 85. You can add the fibs on the opening range. I'm not going to get into it because I don't think most people should mess with it. And it's something that I've actually been playing with a little bit lately, but I'm not fully convinced on the effectiveness. It has worked very well, but I'm not convinced it will always work very well. So we're going to go back just through a few days of SPY and see, how accurate is this statistic. Funny enough, first day that we did it, and we're just going to go back through 5 days. First day that we did it, it was in fact wrong. It was one of the days where neither the high nor low was set in the first hour and a half of the day. We set a new low and we set a new high. So kind of an interesting one. Then we're going to come again back to here. And like I said, you want to find your highest high, and then you want to find your lowest low in that first hour and a half. So we can see consolidated pretty heavily here, tried to take the bounce, again, tried to take the bounce, ultimately broke down, and then we're able to catch some really nice selling. Gave us even another really nice retest on it for another short. So this is a day where the statistics worked very well. Whether you shorted the outside of it, you made money. Whether you longed the inside of it, you made money. This one you could have potentially stopped out on, theoretically. But maybe not. Made money shorting. Probably made a little money longing, definitely made money shorting the failure to break back in. So very easy. First hour and a half of the day tends to work over and over and over again. Let's see, we got this one. That's the 8 o'clock candle. Can do another very nice, because as we discussed, you got your 85% chance higher low of day has been set. So we know if we are trending down, which we are technically trending down, we now have an 80% chance of either a bear trend day or a trading range day. So we're kind of working into the second part of this lecture. That's something that I really like for the opening range. If we are within this box, we're in a trading range, and you need to quit looking for breakouts. You need to quit looking for big moves. These are scalper days. If we are staying within this box, then 9 times out of 10, we're in a trading range. We'll have days where we break out and break back in, of course, but for the most part, we're inside of this. We are in a trading range. So again, another day of it working. We're 2 for 3 now. What do we got here? Oh yeah, this one, I actually remember, I think we talked this one in my class, whenever that was, maybe last week sometime. This is an interesting one because going back to the statistics that we learned just a little bit ago, just want to make sure, those statistics we learned just a little bit ago, like I said, I think it's about a 15 to 20% chance that higher low of day has been set in the first candle of the day. And this was one of those days where low of day was set the first candle of the day. We had an attempted breakout, another breakout or attempt, all with failures. Finally get the nice breakout, even get a retest to stay long into that move. So very, very great use of the opening range here. You really didn't even need any levels on top of that. So 3 out of 4, not too shabby. Yeah, Junior, you need to pay attention and quit sharing your QQQ chase. Oh yeah, this is a bad day in old OOT. One thing I've learned here is that in OOT is that people hate trading ranges, like absolutely hate it. So when the market does something like this, people get just obliterated. This was a day where technically a new high was set, technically a new low was set, but we were also in very, very tight trading, less than $1 for basically the entire day. So our statistic failed on this one, but we went 2 out of 5. That's a pretty dang good average for us. And so that brings us to kind of getting into the next part of the opening range. As I said, I love it because it identifies a range for you. So people should learn how to trade ranges. People who started trading in the last 2 years, they've really only seen trending markets, and they don't understand that. I mean, somebody would have to look at this statistic, but it is over 60% of the time, historically, the market is in something of a range, because the market always consolidates. The market always consolidates before it breaks out or breaks down. That's how it builds fuel for the move, you know? So opening range is a very, very great tool for trading ranges. So how do we do it? It's extremely simple. And I try to beat this into people all the time. Nobody wants to listen, but I do my best. So if we are in a trading range, you buy calls at the bottom of it and you stop out below there. You exit your calls at the top of it and buy puts. So you buy puts here. You're targeting down here. You aren't looking for breakouts. You aren't looking for big moves. And then again, you want to take your profits here. If you get a bounce up to here, you want to be short around here because it's the top of the range. There's no reason to think that it's going to break out. This is one, obviously gave a retest, still no stop out on this trade. Take your money down here. You can try to buy. We know that most breakdowns fail. Most breakouts fail. So you can try to buy calls down here, targeting these highs. Obviously, this one ended up taking a while. Your same days would not have paid you. It took so long. Again, you can short the highs looking for the bottoms. That's all you want to do in a trading range day. You don't want to look for breakouts. Sure, sometimes you can get lucky and catch this. This might have been NVIDIA earnings day. Maybe that's what this big old move here, short cover was. But you don't want to look for breakouts in a trading range. We see it all the time. Days where the market ranges, people lose a ton of money because they think that the breakout's coming, so they get long and then it drops. Or they think that the drop is coming, so they get long and then it bounces. When really the market's just in a range. You guys will see me in trade floor. Those are days where I get grumpy on people because they're, just ignoring what the market is doing in front of them. I'm sure that somebody was buying calls up here saying, SPY's going back to 500. I'm sure somebody was buying puts down here saying SPY's going to 490. And I'm sure both of them lost money because they went looking for a big, they went looking for a big move, and big moves just don't come in trading range days. And so the opening range, really, really wonderful tool for identifying those days. Even we can just do another one, anytime that the market does not seem to be wanting to set new highs or lows and is mostly going sideways, even on breakdowns, you're not looking for much, you're looking for a quick move down. That's all that you want to identify, or that's all that you want to catch. Something that I preach all the time, you don't need to catch all of the move, you only want to catch part of the move. The amount of portfolios that get blown like every day in OOT and just market wide of people trying to long bottoms and short tops is insane. You very, very rarely catch the bottom or the top. So nobody's impressed by you, trying to fight the market or anything like that. Always take the easy trade, always trade with the trend, and always identify if we're in a range. Because if we're range trading, you want to be scalping. That's all there is to it. No questions asked. There is no other way to trade. And so we can see with our things, we ended up doing 6 days. 4 out of 6 days, we identified high and low a day. So it's a very, very effective system. If you're short below it and it starts breaking in, then you get out. If you're long above it, starts breaking down, then you get out. It is a very, very cut and dry method that I really hope everybody can take advantage of. Oh, we got some questions in here. I saw Norvin posting his things. 3-minute opening range. I'm sure that it's just a variation of something Al Brooks did, but no, I've not personally heard of it. There's some Norvin Gaines. Pay attention, Junior. Yeah, 1K. Everybody wants the 200% ripper. So we got a couple of them today, though. Norvin, I can't explain to you what I just spent 35 minutes explaining. I can't just go back and say it again. How do you identify a moving trend? Well, a trend is extremely easy to identify. Doesn't matter. This was last week's class, Norvin. You need a Slim Jim for it. You have a low here, you have a higher low here. At this point, technically speaking, we have now developed a new trend to the upside. That's all you need. This is technically speaking a trend right here. We obviously also had this trend going on today, so you really did want to wait for the confirmation to break above it. But the second a higher low is set, you technically speaking have a trend. Oh, we got Narvin sending charts now, dude. I love this guy. How do I know what the potential reward is? I just do it quick in my head. I know everybody wants to like use those risk reward calculator things, but if you're trading options, they're useless because they don't take Greeks into account. So you aren't really getting an accurate display of your risk or reward. So whenever I think about risk or reward, I always try to think about the movement of the equity. So that's what I pay attention to when I look at it. So just as an example, as I said, we took this call in voice chat today. As I recall, we bought calls on this candle. So to me, I looked at this and I knew final target is this trend up here. So quick math in my head, it's 50 cents. I'm looking for a 50-cent move up on SPY. That's all I'm looking for. My stop is right here, 505.47. My opening range is 505.52. So technically speaking, I'm going to stop below here. I'm personally a pretty big believer in mental stops. I understand if people want to use hard stops. You want to have a hard stop a little bit below there. So we're basically going to say you have a 10-cent risk downside for a 50-cent move upside. So you got 1 risk, 5 reward. Excellent trade, if it works out for you. And using the opening range, using failure to break out statistics, really, really high likelihood, high reward trade right here. So that's how I just do it in my head real quick. I look at this, I'm like, 10 cents down, 50 cents up, 1 to 5, piece of cake, just do it in your head like that as quick as you can. Does this work? That is what we're about to get into with other stocks. That is what we're about to give into right here. Yeah, Empanada likes that really tight 10% stop. I don't ever have a stop based on a percent. I always have a stop based on a level or something technical on the chart. For me, it just works much better that way. EMAs, they can definitely add a bit of confirmation. We obviously don't have them on the chart today because we're trying to talk opening range. But yeah, EMAs, additional confirmation, support, resistance, obviously those should be on your levels or on your charts. And so trade around those, no feelings, no guessing, no just buying things, saying I am buying calls at the opening range. I am targeting this trend. There's your trade plan. Your stop is below here. So now you have a trade plan. So there's nothing to worry about if you go red, nothing to worry about if you go green. You know what you want to happen, so you trade the trade until one of those two things happens. Can you trade SPX? Well, I mean, yeah, it's SPY with an extra 0. I mean, not exactly, but yeah, I mean, of course, this works on everything. But you likely shouldn't trade SPX, just to throw that out there. Okay, now we're going to get in the second part of this. I'm going to add a few more charts. So unfortunately, it's probably going to look a little bit cluttered for people. But I'm gonna do less charts than I normally have, so hopefully we can kind of see. We aren't gonna be talking levels or anything like that on here. And then I'm also going to use I'm going to use the opening range indicator that I told you I had. And so when we see these charts here, because, I'm opening up a few charts here, when we see these charts here, and I want them, I wonder if I got a blank one or something. What if I go back to here? Let's see. Oops. Give me 1 second. So these blue lines that we see here, those are the opening range script that I have. So if you turn it on, these levels will actually, Apple High Day, whoever just DM me that, you're hilarious, Apple High Day. So if you decide to use this script, if you like it, like I said, it's pinned in my tab. So if you want to use it, great. These lines will move until the range is set. So always remember that. Don't get tricked by it. So how I might use the opening range, And we're just gonna pull these up. You know, we're gonna have our SPY here, we're gonna have our QQQ here. And then I pulled up Apple, Amazon, Microsoft, because obviously, you know, they're you know, obviously these are market movers. You know, the market tends to follow these things, and so I like to watch these big names. But how I might use the opening range, and we're just going to do a few examples with a few of these charts here. The first one, and this was the one that Zane asked me about in voice chat today, and what I was describing to him is if you look at QQQ and you look at SPY, and one of them is failing the opening range and one isn't, you know, don't get me wrong, this one spent 2 candles outside of the opening range and one of them isn't. How I always describe it is one of them's lying. You know, whether it's QQQ or whether it's SPY, we don't know, but we want to watch to see, because if SPY is losing its opening range, QQQ is holding its opening range, then most of the time we can assume one will catch up. You know, whether QQQ breaks down or whether SPY breaks up, we don't know which is going to happen. But today was this very great example where, you know, they broke down. They both took a big bounce. You know, they both took these 10-10.05 bounces. And then QQQ got back in its range and held it. And so we were in VC. Again, this was another trade we took today. We set a higher low right here. We got calls right here because we're setting a higher low. So there's potential for a reversal on SPY, and we have QQQ back in the opening range. So we have a very nice tight stop here. Any close below the trend, 15-cent stop below the trend. Or if we're starting to go really sideways on SPY and QQQ is giving up the bottom of the range, then we can look to stop out of our SPY calls, because this one is going to play catch up with SPY. So I like to use them for sort of that market wide confirmation if you can. We had an interesting one today, and this is a really great one because, you know, QQQ made some nice moves today. However, it was range bound all day, technically speaking. And how could we have potentially identified that? Well, even just looking at these three, we had Amazon well outside of its opening range, Apple barely outside of its opening range, and Microsoft sold outside of its opening range and started to bounce before everything else. So when you don't have the big names breaking down, QQQ, all of them breaking down, QQQ is not breaking down. If we don't have the big names all breaking out, you know, we only ended up with Apple, and we rejected the top of the opening range almost to the cent today. You know, Apple was the only big breakout on the back of that news. So if we don't have all the other big names breaking out, then they're likely not going to break out QQQ. And so that's when you start to watch. Are these tech names going to break out or break down? If they do, look to short QQQ. You'll oftentimes be able to see the weakness in these before you see the weakness in QQQ. And so that's one of my just absolute favorite ways to trade it. Any way to use any way to use the opening range. The market-wide confirmation of understanding, you know, what do all of these charts combined tell me about what might happen in the market? And so this is an extremely powerful tool as far as analyzing the market intraday. You know, if you're seeing all these big names bounce or hold the opening range, quit trying to short down at lows. You know, you definitely want to be getting long at lows. If you're seeing buyers show up on these names, there's no reason to try to be shorting them, you know? And so, really, really great use of the opening range. And so then final thing we're going to talk about, and I'm going to get rid of these so we got our uncluttered chart again. I just wanted to show, you know, the broad market analysis using it. It works on every single stock. Obviously, you know, I posted on SPY more than anything else, and QQQ, because those are what I trade the most. Those are what I like to watch. Those are what people want information from me regarding. So that's what I post all the time, and it's what I like to trade and everything else. However, it doesn't matter the stock that you're trading, because it works on everything. market-wide statistics are market-wide statistics, you know? We got our 85% chance higher low of day. God, you are on one, Norman. We got our 85% chance higher low of day has been set. So if you're trading something like Amazon, you know, these aren't big moves, but these are all reasonable bounces down here near this opening range. I mean, obviously we didn't know this one. All reasonable bounces to try. Obviously, if you don't have a scalper's mindset, you're going to end up getting blown out. But you have to take into account that you can make money over and over and over again on 60-cent bounces on Amazon. You don't want to be the person that buys calls here, goes green, goes red, goes green, goes red, goes green, goes red, goes green, finally stops out for a loss. Don't be that person. Don't hold them. Don't get chopped up all day. You see 10% and everything looks like this before you, 20%, take it. Take it again, take it again. Obviously, this would have been a hard short to catch. Like I said, we don't want to be short down here. But we've had all these tests down here. That's when you start to say, okay, we're trying these lows a lot. Maybe I don't want to do it. You know, maybe I don't want to scalp calls here. So works on anything. You can pull up any stock that you want and you will see reactions around these levels. As we know, these are the lows and the highs. So you could have got short down here. You likely got, I mean, we're at 180. You always have to take big things into account. Don't be short here, you know. But as soon as this thing breaks back in, long it, you know. I would typically say short it up here, but this one just blasted it. There was no short in this thing, but it will work on anything. I mean, you can slap it on Tesla for you Tesla traders, you know. Obviously, nice bounce off the lows down here, up into the trend where you would likely want to be short. Get your money on your shorts, and then breakdown with a nice retest, short it to our previous levels. Really nice trades, very simple trades over and over again. Gotta love it when it lines up at a nice whole round number. So you can use the opening range on anything. It will give you effective trades. I should say, and you guys see it for me. I mean, if you aren't picking up on it yet, I'm a scalper, and like I'm a real scalper. You know, I'm not looking for huge trades. I'm looking for 10, 20, 30% in 5 minutes. I would way rather make 20% in 5 minutes than sit around for, you know, an hour waiting for a contract to move 20%. I want to do it quick. So I will say most opening range trades will provide a scalp. However, you have that, you know, I don't know, I'll just make up a number, but you have that 20% of the time or whatever it is where you set a low and you get long and you happen to catch the bottom, or you set a high and you short that top of the opening range and you happen to catch the top. It's not going to be every time. It's probably going to be, you know, 10% of the time realistically, maybe less, but it can frequently be the turning point in the market. But again, you buy calls until they fail. If you break below, you short it because you assume the break isn't going back in. You make money. If you're for some reason still, you know, if you're still short here, obviously you stop out as soon as you break in and you look to be long inside of it. And just treat it very simple. Rudy, good question. So for me, I'm a big fan of a mental stop loss. However, when I discuss stop losses with people, you need to have two stop losses. You need to have in your mind, you know, say we buy calls here and we get this bounce, but we don't take the profit. You know, it's only 30-cent move on Microsoft or whatever. We're probably in some out of the monies because they're so expensive, you know. So we get this move. Well, what I normally say is wait for the candle to close. And so in our mind, maybe we get calls here and we say, I'm stopping out on a close below this opening range. Well, this is a situation where, you know, God, it's only 13 cents, you know, so maybe you don't take that stop out and you get the bounce on the next candle. I'm also a firm believer of don't let the market go against you twice. And if it went against you once, when you see this happen, stops go to profit, you know. However, that's just your mental stop loss. In any trade, and I do it in all my trades, you need to have what I describe as a protective stop. And what a protective stop is how bad are you willing to let it get? So we'll just put a we're just gonna put a level on here, 405. I mean, it probably matters, but we're not gonna say it's a huge level on Microsoft. Say we get calls here, and then this candle closes here, but you want to see, what's going to happen. Well, you need to have in your mind what is the maximum amount of money I'm willing to lose, and you need to have a stop right there. And you need to not falter from it. It can be a hard stop, if you want a hard stop, bump it, a few cents below it, but you always need to have your mental stop, which will be candle close outside of the opening range, but you need to have your protective stop on something like this, where if things start going really bad and it really starts going against you, you get out, no questions asked. So there's kind of two kinds of stops to think about. Dude, Alberto is just nonstop, huh? PLTR, yeah, I'm sad about that one. That was a trade I really wanted to catch. I was watching it yesterday, and it even gave this nice pullback. And then by the time MMA's like PLTR's going, it was up here, and I was like, I'm not buying calls at a double top. You got the 28s at 0.78, I swear, or 25s. That was probably right around here. I swear that's about where I was looking at them at that price. Yeah, swing. I mean, look, nice move. I mean, if this thing holds for you, those 25s will be up nice and open tomorrow. It's Monday, Tuesday. I don't even know what day of the week it is, but you got plenty of time. I mean, I won't say generally swinging weeklies is a very bad idea, but on something cheaper like this, that a 20-cent, 30-cent move is a nice move, you'll be good to go. Okay, let's see. We're just getting all kinds of Northern questions in here, huh? Yeah, Sapphire and PLTR just might be, they could be a good buy. They've yet to prove themselves. All right, on Christina, thank you. 0.90 now. Yeah, that's not bad, huh? Okay, well, that's what I got on the opening range. Like I said, just a very simple statistic. Oh, I saw somebody asking me if I have this script for TradingView. No, I do not. It's for Thinkorswim. But you don't need a script. You need to find the high and low of the day. Like if you don't want to draw a box, do two price levels. That's all you got to do. So just nice, super simple, gives you very defined ideas to trade around. As we can see, it works on everything. You can pull up any chart any day, and you will almost always have a reaction near the opening range. Doesn't matter what it is. I mean, even T, like really nice bounce. Oh no, we missed that one. That was set. But then the breakout of it with the retest to get long. The opening range provides many trades on many stocks every single day. ARM, I mean, dude, you can't trade this thing. Like, it doesn't trade on technicals, dude. Look at this. I mean, to me, these are all just inside candles. So to me, I basically have no interest in ARM. If I was an ARM right now, as much as dude, I can't wait to be wrong on this one. If I was an ARM right now, I would be short. I would have shorted this 150, no questions asked. And I would not be getting long right here. We're in the middle of the range, Uh, VRT, we already pulled that one up. Do you remember? Hey, Norvin, do you recognize this? You should, because you asked me about it in class here. And then I said, buy this flag when it breaks out. And then it ran from 53 to 68. XLE. Oops. That one's been, yeah, see, this is the issue on XLE right now. And been an issue for SPY breaking out too, is what the sluggishness of this thing. And it's weird because we had a really nice move on oil today and then nothing here. But this is it for me on XLE. Basically this range right here, anything all the way to down to 85.28, get long on it. And then as we start pushing up towards this 87 that has just been impossible thus far, short it. If you really want a wider stop, you can go 87.17 previous high, but short these highs, buy these lows. I mean, XLE is a great one because it's frequently range bound, so you can hammer it up, hammer it down, hammer it up, hammer it down, sometimes every single day. But for now, for me, and I guess I really should likely have this level on here, and I should have these levels here. Till we crack that 87.15, we ain't going nowhere. And even then, we're likely only going to 87.70. And then we can kind of start to get pushing up to these 88s, 89 areas. How do I make a box? Yeah, great question. Remove this. So down here in the drawing panel, it's just this little rectangle one right here. And then when you draw it, you click at the first point you want it, and then just kind of drag to the right, and it'll make the box for whatever you want. You can make them as big or as little as you want. And then if you don't like the color, you just right click on it, edit properties, and then you'll be able to go into color and see, you'll be able to pick whichever color you want, That's gonna be hideous. We gotta get rid of that one. Let's see, we got questions pulling in. Yeah, right on, Rudy. Thank you so much. Opinion on Spy Daily. Well, we hit my target because this is it Tuesday? What day of the week is it? I don't even know what day it is. It's Tuesday. But this week I wanted a pullback. We've got my pullback. I mean, I said I wanted 503, 504. However, when I went to the daily chart, a lot of people know I love that 513 EMA combo on short time frames. It's just been really, really effective on the daily time frame. And so today, this dip all the way down to the 5 EMA, and these are, exponential moving averages, not simple moving averages. That was the dip to buy today. Definitely don't want to be short as we get down anywhere near that thing. And we're in a dip buyer's market, buy these dips as we pull to these major EMAs. So for me, I'm not saying that we're like ripping tomorrow or anything. I think that we should honestly do this on the 4 hour. We can probably get better detail on the 4 hour. For me, here's the trend. No surprise, if we look at the 5 minute, we came right to it today. That's the trend that everybody should have their eyes on. So I'm not saying we're breaking out and we're ripping. However, tomorrow's daily candle will open outside of the trend. So I'll likely be looking for a pullback to the trend to get a nice little dip buy going on. The script is just pinned in my tab. If you can't find it, just tag me in the Discord and I'll make sure I get it sent to you. XOM I won't talk about because I know we got a running alert on XOM right now, so I unfortunately just can't mess with that one. Mind explaining what an inside candle is? Yeah, you got it. Let's go back to XLE. It tends to have inside candles. So yeah, of course it doesn't have any great inside candles right now. QQQ got some. So what I consider, Apple maybe on the 4 hour. Not really. Intraday maybe. Yeah, still not seeing one that really just jumps out at me. I want to find you like an applicable example. Oh, here we go. I bet we're gonna have one here on the 15th. So we have a big candle right here. Obviously big candle. So now how I treat inside candles is slightly different than other people. So if I'm not saying they're right or wrong, and I'm not saying I'm right or wrong. However, what we have here, big candle. See how all these candles, their wicks and bodies following it are inside of this one? That's all we mean when we say inside candle. Now, where some other people might disagree with me here, there are some people that think entire wick and body needs to be inside the body of this, not just inside the whole candle, including wicks. I have always much preferred just thinking of inside candles as all with inside the whole candle. So to me, every single one of these candles until, well, I guess this one and kind of this one with its little wick, but really this one is our first outside candle where we saw something outside of it. So it's kind of where we can look to short it, that kind of thing. But inside candles are great because they show consolidation. So you know that it's an easy trade, long above it, short below it. And that's how, most of us use inside candles. Yeah, right on, Scotty. Thanks for being here. Yeah, if you have any questions, Christina, always feel free to shoot the message. Bearish divergence on RSI. Yeah, I'm not even gonna waste my time pulling that up. No offense to anybody that trades RSI, but it is something I put little to no faith in. I mean, there was a bearish RSI divergence on Nvidia from I don't know, 200 to 600. So no, I don't buy into those personally. What EMAs again? So on that daily time frame, and so I gotta say, these aren't always, it's just the ones that are working right now. The 5 and 13 are working really, really nice. Another one that I like to trade is this 12 and 50. Obviously, this was, when people were asking me where I was looking for pullbacks and they were asking me yesterday, I was saying to that, 500, 502 area seems likely. That's based on this EMA right here. So the reason that that 5 and 13 is nice right now is because the market's kind of like, and don't get me wrong, we've had some big moves, but it's doing a lot more slow grinds and dips. So I want a more reactive EMA. And so that's why you go for the 5. It's going to move, its data is based on these candles and this one. So dips to it tend to get bought pretty aggressively, or they offer a nice stop below it is all. Yeah, we do have news tomorrow. We got GDP. I don't know. It's like I'm sure it's a revision or something. Well, you're asking me to explain inside candles in the next lecture, but I just described them in this lecture. Oh, and then the next person says great explanation on inside candles. So we got some conflicting views right now. Okay, 6 o'clock for anybody who's got to get out of here. Thank you for being here. You all are the best. Great turnout tonight. Love talking the opening range. If you got any questions, always feel free to DM me. And then let's see. Well, how about us? We got here. Yeah, Norvin, thank you. Jack, I think that's Jack. I'd say your other name, but I just butcher it. Sunny, thanks for being here. Norvin, what is HWM? Howmet Aerospace? Yeah, I have no idea what that is. Tell Anth about that one. He's been into buying just random stocks lately. Tell him that. That's right up his alley. He's been like, I've been giving him trades and he only buys them once they're up 50% since I told him about it. Yeah, so on a range, if you're looking to trade a range breakout, I think we were talking XLE probably. If you're looking to trade a range breakout, then, and we'll just say this pretty much, you want to be short up here at the top of the range until you get the breakout. Obviously, I much prefer a breakout retest where we can get long here, tight stops, but you don't want to be long until it breaks out. We see it in here all the time with people. They buy the middle of the range and then they have to average down here. When if they were just patient, they could have bought it down here. And then when other people, the impatient people who bought the middle are breaking even, they're trimming for profit. By the time the people who bought the middle, if they end up making money, which they normally don't, are up here, you're trimming for huge profit and they're trimming for half the profit that you have. Same as downside. You don't want to be short at the bottom of the range. I mean, that was Apple. Trying to if you are looking at Apple at 180 right here and you're thinking short, you're high as a kite. You hit your head or something. Go get that thing checked out. You buy lows. If you wanted to short this trend after that rip, no, yeah, great trade. No questions asked. But you want to be long at lows and you want to be short at highs all through here. So, and that's everything. That's every stock. Even in here, I always encourage people, man, if you're going to take a trade, look at the longer time frame. If it's range bound and it's in the middle of the range, don't take a trade. Pretty simple. Oh, we got FaZe in the house, dude. FaZe, you got a question? What's up? T or Abercrombie and Fitch for the long-term part. Asking the hard questions right there. At this rate, Abercrombie and Fitch, man. Look at that thing. Oh man, first red day and well, I guess only 5 days, but that's only the second red day in about 3 weeks there. PLTR, kind of we talked about this in a little bit, but I'll go back to it because it is a trade. I know Shark's in on it. He's already up big, obviously. I just don't like getting long this close to previous highs. Obviously, a dollar move up can pay you really well on PLTR, but I would rather either look for that push up to here and short it, or wait for the breakout and just pay that extra money, the premium, to confirm that breakout to get long on it. Oh, would I check XM, please, man? I just can't. Unfortunately, I'm sorry. We got when we have alerts running, when an analyst has an alert, I don't ever want to talk about their trades, because maybe they think, maybe they think completely different than I do, which is fine. I'm not, I don't want to say anybody's right or wrong or anything like that. And I don't want somebody to stop out of a trade that might pay, so that's all. But if you ever want to like DM and talk about a trade or anything, obviously we can do that. But I just don't want anybody, me saying something that disagrees with other people. Norvin, of course you're on that one. Just the pump and dump king. Who cares? This means nothing to us. Yeah, cool. They got a new drug. We all missed the 200% ripper. So no big deal. Who cares? Let this thing settle for a few days and don't touch it, Okay, well, that's gonna do it. I appreciate y'all for coming. Really great lecture tonight. Great questions. Fun time with all of y'all. Yeah, thank you, everyone. Wendy's. Dude, I like that one, Lambos. That's a sick one, dude. Yeah. Okay, thank you, everybody. We will call it a night here and catch you all tomorrow. Have a good one.